Hello and welcome to World Business Report from the BBC World Service. This is Mike Johnson. In the programme ahead, the Chinese central bank has today cut a key interest rate. That's after latest figures showed that growth slowed there towards the end of last year. The economy expanded 4% in the last quarter of 2021 compared with the same period last year. China introducing, of course, new restrictions to try to keep the coronavirus under control. And Andy was giving us his thoughts on those latest developments there. He's in Shanghai.
The Chinese economy is in debt trouble, and China was on this debt binge for many years. Debt rising much faster than the economy. At some point, the trend will turn. You go up too fast, then you have to unwind. It began the beginning of last year, and where people saw some property companies like Evergrande got into trouble. It's a sign of that. So it's really not just the property sector. The household sector is deeply in debt also. The household debt is close to 150% of disposable income. Not the highest in the world, but pretty high. And industrial companies are heavily in debt also. So the debt level, the central bank says is about 280% of GDP, but if we include the shadow banking system, could it be 350%? This is a very high number. You need to work it down.
Yeah, and I know you've been warning about China's debt bubble for years. I think back in 2016 you said China was heading for a 1929 style depression with expansion of credit, loose monetary policy. We've seen another cut in interest rates today, and this widespread belief that asset prices would never fall, leading to speculation and then possibly a crippling market crash. I mean, do you still stand by that? Are you still worried about that?
I think that it's never too late to correct a mistake. At the beginning of last year, the government changed its mind and set up these so-called 3 red lines on debt leverage. Now, is this too late? I think that inevitably we're going to have a period of slow growth. And so China is kind of a export sector looks like it's going to hold up. So to give the domestic economy some room to adjust, but you need to be sincere about changing your behavior. The other is that China needs to do structural reforms. There are a lot of problems in the economy. China hasn't done reforms for 20 years. Since then, it's been coasting. And whenever the economy ran into trouble, the government ran up debt to get through. So this is where we are now. It is because of that. So that part I'm pessimistic about because the government is not focused on the economy growth or whatever. The government is really focused on political control at home and strategic competition abroad.
And what does all of this mean for the government's ability to create jobs and avoid social unrest? You're talking about a picture of lower growth. You're talking about the debt situation. Can the government keep creating enough jobs to keep its people happy in China?
Well, the government has been talking about creating so many jobs. They need to create so many jobs, which is not true for many years. Chinese labor force has been declining. You look at what happened in Japan in the 1990s when the economy went into stagnation. There wasn't an employment crisis. The reason was because that their labor force was not really growing. In the case of China now, it's not growing and it's declining a bit. So there are people who are unhappy because they used to have high-paying jobs associated with bubble sectors like the property and internet. But there are plenty of jobs out there. And the factories and the construction sites cannot find enough workers. So I think that on the employment side, the government has been exaggerating the risk. So I think it's really a slow growth story and taking your time to work down your debt so you can have some kind of a smooth landing.
That was the independent Chinese economist Andy Xie there. He's in Shanghai. Well, that's all from me for now. You can get in touch with us by emailing world.business@bbc.co.uk. And business news is updated constantly on our website, bbcworldservice.com. Thanks for listening.